Hi, I'm Jenny Brown. Welcome to this week's edition of MFB News on a very grey and rainy Wednesday. Autumn's definitely arrived, hasn't it? I've had to crack the knitwear out actually because I've been so cold over the last couple of days. So look, we've got some really good stuff this week to cover off. We've got the inflation news which came out this morning, so hot off the press for you there, and what that's going to mean potentially for interest rates going forwards. We're going to give you our usual update in terms of what the lenders have been up to in terms of repricing. Guys, things are getting a bit better. It's really, really nice. So I'm really glad to be able to share that with you this week. We're also going to touch on the fact there's a new how to rent guide being released and what's contained within that that's relevant to you and what you need to know. We're going to be talking about house prices. And lastly, we've got a new feature. So one of my very lovely clients, I was just chatting about this video and saying, look, as a landlord, how can we improve it? And she said, well, actually, what would be really interesting to hear is like a complicated deal that you've placed or a question you've been asked this week, which could be interesting to the people that watch this video. So on that note, we're going to be bringing in a kind of regular feature, which is going to be essentially a question or something a bit unusual that we've been working on. Now, on that note, if there's anything for you watching this video that you would like me to answer, feel free to post a note in the comments below. I'm very happy to answer questions or talk about certain subjects if there's something you want to know about. So for example, I don't know, breaking up a freeholder flats, what's the maximum age on a mortgage term, whatever it is, very happy to answer those off on a weekly basis. So lots of stuff for you this week. Okay, now just before we go into the market news, just to say my dog's with me at work today. We don't normally work in the office on a Wednesday, but I've had to come in today and I've had to bring the dog in with me because I've got no dog walker on a Wednesday. So if you hear some strange noises, he's kind of scurrying around my feet at the moment. I promise you it's the dog. Okay, now, so this morning, Wednesday morning, in the inflation news came out, and actually it was a bit of a surprise. So the markets had kind of penciled in a slight increase in inflation this month and have been kind of pricing their rates accordingly. But actually inflation came down ever so slightly, so down from 6.8% in July to 6.7% in August. Core inflation is also down from 6.9% down to 6.2%. So that's really, really encouraging. Now what this does, because the markets had expected a base rate increase of 0.25% in the next couple of days, actually what this has done is kind of thrown into the mix now. Will the base rate go up at all? And actually I'm not going to speculate on this. I mean, it's only going to be tomorrow. We're going to find out anyway. So I'm sure we can all hold on until then. But what it is fair to say is that another base rate increase is looking slightly less likely at the moment. Now, in terms of lenders, so think about mortgage rate pricings. This is now not in reaction to inflation news. This is kind of stuff that's been happening in the run up to it. So we have seen another week of rate reductions, and positively that's because swap rates have been easing down even further. So they've been hovering around the kind of 4.55 mark. So much, much lower than numbers that we have been seeing. So that's really encouraging. And because lenders' cost of funds has reduced, they're able to bring their pricing down as well. So what have we seen this week from the lenders? So first of all, Paragon have reduced their rates by up to 0.29% across the piece, and they've also bought out some limited edition products. So they're green rates, properties with an EPC rating of A to C, 5-year fixes from 5.05%, and standard properties and non-green essentially from 5.1%. Also, just to note that the rental calculation they're using on their 5-year fixes is 5.5%. So if it's a limited company, it's 125 at 5.5%, personal home 145 at 5.5%, and there's another calculation as well for HMOs. But actually, that's kind of like back into all of this territory in terms of the rental calculation. The rental calcs are really kind of hindering us at the moment, and a lot of clients are really struggling to make the numbers work. So really, really great news from Paragon. Just to recap, specialist lender, HMOs of up to 20 rooms, multi-units of up to 20 self-contained units, limited companies, can accept layered structures, day one remortgages. They also lend to individuals, £25,000 a year, income requirement, no maximum number of properties in the background. I think that's the kind of key stuff you need to know. Okay, so moving on from Paragon now, Foundation Home Loans have released a new limited edition product. Now, the rate is from 5-year pricing, fixed rate pricing from these guys now from 6.69. What's really good with these products is not so much the interest rates, but it's the arrangement fee, which is £1,495. So actually, when you look at your overall cost over a 5-year period, these look actually quite competitive when you line them up against some of those products with the larger percentage charge arrangement fees. Again, Foundation Home Loans, specialist lender, you guys know what that means. One of the things actually, just to say, the kind of real unique things about Foundation, they've got some really quirky stuff. We talked about them last week in terms of their new unlimited number of rooms in an HMO, holiday lets and all that kind of stuff. But their day-to-day lending, one of the things that they do, which is really nice, is when they're lending to a limited company, they take a personal guarantee only from the company directors, not the shareholders. So what this really allows is for, say, for example, quite complex structures to be in situ. You can have a situation where maybe, I don't know, mum and dad are directors of the company. They also own, say, shares of 20% each, and then the kids own the other 60% if there's 3 children, 60% of shares. Some lenders wouldn't do that. So it really does sort of allow for slightly more flexible company structures. Another lender who's very good in this way is Kent Reliance, incidentally. Okay, so that's Foundation Home Loans. Land Bay have reduced their limited edition rates by 0.1%, so their pricing is now from 5.05. Kensington have reduced their rates by up to 0.4%, and they're pretty high to begin with, if I'm brutally honest. So a big reduction, a big step down from those guys. Still not market leading, but actually still not bad at all. Now they brought them back into the kind of realms of acceptability, I think. And then lastly, we've seen from the specialist lenders, the mortgage lender reduce their rates by 10 basis points. In the more kind of high street, end of the market, Accord have made rate reductions, of up to 0.51%, so just over 0.5%. The mortgage works have reduced their new business rates and also their switcher rates, the rates they offer to existing clients, just simply transferring onto a new deal with them. To give you a flavour, 2-year fixed pricing from 4.99%. We've seen TSB reduce their tracker rates by 0.4%. We've seen the Coventry reduce their rates by up to 0.25%, and we've seen Virgin reprice down with rates reducing by up to 0.21%, so their rates are now from 4.87%. Now, with all of those lenders that I've kind of referred to as high street lenders, I'm sure you guys know the drill by now. So broadly speaking, no more than 10 buy-to-lets in the background, no limited companies, no HMOs, no multi-units. The exception in that list would be the mortgage works, who do lend on HMOs, multi-units and limited companies, and can accept larger portfolios that have a different product set for that. So in terms of where this leaves us, we haven't done a roundup of pricing for quite a while. So I thought it might be quite useful just to give you a kind of flavour of where we've got to in terms of where pricing sits now across the whole piece. So if you are an individual looking to finance a very, very straightforward property, your 2-year fixed rates are starting from 4.59%, but this would carry a 7% arrangement fee. Or if you prefer a lower fee, working my way down the list, and there's loads of deals at the moment with these really large fees. It's just what the lenders have kind of done to try and make the numbers work for landlords in terms of rental calculations and all the rest of it. So if I work my way down the list, the first rate I come to, which has got anything less than really a 4% fee, is a 2-year fix at 4.89 with a 2% fee. So that's where your pricing's from there. 5-year fixed rates are from 4.98, flat fees on this one, and tracker rates are from 5.26. So just 0.01% over Bank of England base rate, which is actually very competitive. Limited company lending, HMOs, multi-units, the more specialist end of the market, your 2-year fixed rates from 4.59, but again, just think about those arrangement fees. So if you want something with a kind of flatter arrangement fee, 2-year fixed rates are from 5.69% with a £5,000 flat fee irrespective of the loan amount. 5-year fixed rates for limited companies, HMOs, multi-units, from 5.05 with that 7% fee, or from 5.75% with a £4,000 fee. And again, your trackers are from 5.26%. So what does this all mean? So actually things are continuing to track down very, very gradually. How are we expecting swap rates to react to the inflation news? Being really honest, I'm not entirely sure, because they kind of priced in an expectation of an increase in base rate tomorrow, when they've been looking at their kind of forward projections on what they think base rate's going to do. It's going to be a bit of a surprise, this inflation news, because they had been expecting inflation to actually increase this month. So I suspect actually probably we won't see a huge amount of reaction from the capital markets. It's very, very hard to tell. And there's a lot that goes into the inflation data, which all their kind of money people are going to be now looking into and trying to sort of make judgment calls about where things are going to go, what this actually means longer term. But my suspicion is that actually we probably won't see a huge amount of change in terms of swap rates in reaction to this news. The bigger news is going to be in terms of what happens with base rates. So I think the best thing for me to do is just say watch this space, and I'll update you again next week. Okay, now as a landlord who's recently gone through the process of evicting a tenant, I know only too well how important it is to make sure that you have absolutely all the correct bits of paper signed and dated by the right people at the right time. And I've bored you with my whole saga of this before. So when I saw in the news that there was a new how to rent guide being published in early October, that really kind of caught my interest, because actually if you can't demonstrate that you have issued a how to rent guide and the right version of it to a tenant when you come to an eviction process, your case won't stand in court. So it's really, really important that you have all your paperwork in order. So just to be aware, there is a new how to rent guide coming out early October, so make sure you get your hands on that for when you get new tenants in. Now actually, alongside of this, there's some quite interesting changes that are coming into the guide, some revisions, which I just wanted to share with you. So the new guide is going to include reference to the Housing Loss Prevention Advice Service, which is essentially a service which provides help for tenants at risk of losing their homes. It includes free legal advice plus also in-court advocacy as well. Lucky the tenants having paid loads of court fees and legal costs. I'm glad that someone's getting something for free in the whole series. I'm so bitter, aren't I? Now, in terms of other news around this, the other thing that's changing is that this is now going to include an extension of the service, and it's going to include what they're calling early legal advice. So that means that essentially at the moment a tenant, and actually a homeowner as well, because this includes people who are being repossessed by their lender, are issued notice to leave the property, then they can approach this service for some legal advice. So I think as landlords, what's really important for you to know is simply that there's going to be a new version coming out. You need to make sure you're giving your tenants the right one, and you need to be able to demonstrate that you have done this. The way that I think most people do this is they get the tenant to sign to confirm that they've actually received it on the date that it's been handed over. Okay, a quick update on house prices now, as Rightmove have released their September report, and what they're saying is that the average asking price of a newly marketed property has increased by 0.4% to £366,281. They're saying that prices have bounced back from the 1.9% drop in the previous month, though property prices do typically increase at this time of year. In fact, actually what they've said is that they've recorded price growth, in all but 3 of its September reports since 2001. So you would expect house prices to kind of tick up a little bit around this time. They're saying that the house price growth fell to minus 0.4% year on year, with the biggest drop since March 2019, with 36.3% of properties currently for sale reducing their prices by an average of £22,700. Now, in terms of what this means for you and kind of where we are on the house price curve, hopefully, I think this is an indication actually the downturn is really slowing. When we're talking in the industry, there really is a genuine belief that actually the reason buyers are kind of holding off is at the moment because of the mortgage pricing. So either they simply cannot afford the higher interest rates that are currently on offer and they're waiting for things to come down a bit, or actually they are just waiting for the market to settle more broadly. So actually, once we see a bit more stability in terms of interest rates, once things kind of really do kind of look like they've plateaued, you may find that people are then looking to kind of start their transactions, start to acquire their first home, move home, whatever it might be, and that will sort of bring people gradually back to market. So the expectation is that actually house prices are really starting to fall, is starting to really settle down now. It's going to start to plateau, probably in spring next year, maybe a little bit before, depending on what happens. There's a lot of things that go into this: unemployment, inflation, interest rates, recession. There's talk of that again now. So there's a lot in the mix here, but in spring, house prices would have plateaued and maybe start to recover through the summer. And by the end of next year, we'll be back in positive territory. So as an investor, that's your kind of window of time if you want to secure properties for what would be a good price compared to what you might have paid for it at the same time last year. Okay, now in terms of question of the week, which I think I'm going to call this segment of our video, I had a really interesting conversation with a client, and actually it's one that I think is probably the most asked question that I receive, and that is around ages of mortgage borrowers. So there is a kind of belief that once you hit 75 years of age, you become unmortgageable, essentially, which simply isn't true. So the question would be, what's the maximum age I can be to apply for a buy-to-let mortgage? And the very short answer is that until you reach the age of really 70, there is no limit on ages. Once you go beyond 70, and therefore, because lenders have a minimum mortgage term of 5 years, every time you take a mortgage, it has to be for a term of at least 5 years. And some lenders do cap out at the maximum age of 75. So 70, your options start to dwindle, but actually we have lenders who will have no limit on ages at all. So you can apply for a mortgage in your late 70s, your 80s, it really doesn't matter. And actually some of these guys will give you really long terms. One example would be the Mortgage Works, who if you apply for a mortgage before your 70th birthday, you can have a 30-year term, which I think would cover most of us in terms of how long we're going to be on this earth. But yeah, so actually the good news is that if you are a landlord, you've got a bunch of buy-to-let properties in the background, you're kind of into retirement and thinking, goodness, you know, am I going to run out of kind of chances to mortgage these properties and I have to start selling stuff off, that kind of thing. The reality is that there are lenders who will take you kind of into your, 100th, your centenary, so no need to worry there. So actually, good news. Realistically, in my mind, there is no maximum age to apply for a buy-to-let mortgage. It's just that some lenders wouldn't necessarily take on those more mature borrowers. There we go, and that is everything for this week. As always, if you have any questions, we'd love to hear from you. 0345 345 6788. I look forward to being back with you next week so we can discuss the base rate and what happened there and how the future's starting to look, and also further lender changes. But until then, look after yourselves, keep dry, and I'll see you again same time next week.